Hello, folks. Welcome to the Weekend Investing Stock Market Weekly Review for the week ended 7th of February 2025. As you may recall, we do a weekly check on weak momentum score stocks that will release on 9th of February. Please do watch that. From our research desk this week, we have all these fantastic stories to share with you. Some of you may have already gone through them. There was a story on opportunity cost, how some sectors are dominating during the stress times. Uh, some stories on gold, equities versus bonds, how US markets is thriving in the Trump era. Likely market bottom. Is it possible this quarter? Um, Gold versus small caps, performance distribution content, the problem of too big to fail, and accepting volatility as part of the game. So all these stories and more, you can see them on the app, or you can watch some of these videos on the YouTube channel, or you can even read the daily newsletter that comes to your uh, email. Disclaimer, please do read fully. This is basically for illustration and there is no recommendation. Um, do subscribe to the channel as well. The Nifty daily chart is somewhat a mixed bag. I would say it's a great 1,000 point run from the bottom, but we are now getting some resistance at 50 DMA, the orange, the golden line that you can see. And of course, the 200 DMA is also not so far, maybe 5, 600, 500 points away. So once we are able to negotiate the 50 DMA, maybe more consolidation and then a attack at 200 DMA. My own personal sense is that we may spend some more time here. I don't think immediately we are going down unless there is a global, because most results, poor results also that have come have not really disturbed the stocks as much as one would have thought. So a lot of it is already baked in, and within the sort of emergence of focus towards growth. Two things that the government has very immediately done is, of course, the tax break that will release about 1 lakh crores of direct money in the hands of the people, and there is a lot of second order and third order impact of that. Some people estimate it to be almost 3 lakh crores also. Um, that and the RBI, of course, starting the rate cut cycle again. I think that can at least provide stability to the market, even if we don't, go up immediately. On a weekly front, we are right at that sweet spot of 23,500 odd. Um, it's a good correction that we've had, and potentially we can spend more time, but eventually we will see it going up after 0.3% up for this week. S&P 500 also has uh, been slightly soft this week, but no damage done. You can see it is hovering near its highs um, of the last couple of months. Gold is up 3.5% this week. We've now closed this week at its highest ever once again. And 85,000 on 10-gram gold has come very, very quickly. We were at 75,000 just towards the end of the calendar year, and it has now peaked to 85,000. You can see that after every run, there will be a rest, run, maybe another few thousand points, and then there'll be a rest. The the picture is very clear that gold is the market which everybody wants to get into. There's very little exposure to gold that institutions and people have, and that will increase over time. Dollar index is a confused entity right now, minus 0.37%, not able to go beyond 110. I think breaking down of this support will be very big for India and for precious metals, both. So I'm waiting for this bottom to break down. But if it does manage to go up, then of course, foreign fund flow out of India will continue. In the benchmark indices overview, for the last 1 week, there has hardly been any change. Whether Nifty next 50, I mean, nothing worth talking about. So last 1 week has been just a flattish 1 week. Last month gone by is still quite negative on small caps, although on Nifty last month has been stable now. And if I see last 6 months, Nifty has lost 3%. Nifty next 50 has lost 12.2%. So this is the big loser in the last 6 months. Mid cap and small caps are still at 6 and 7%, and the last 1 year is still quite green. So disaster has not yet happened, and I hope it doesn't happen. But that's where we are right now. In the Nifty sectors overview, you have FMCG losing 5.6% this week. That is huge. I think post the results, more damage has been done. Defense stocks also losing post the budget, where no major announcements happened. Real estates have given up some of the gains. Uh, Consumption stocks should have picked up, I think, post the budget. I don't know what's the reason for the fall. Pharma, metals, capital market, IT, these are the ones that have been running in the last 1 week. If I were to just step back and take a year-long picture, most of the sectors are still doing all right. But energy, oil and gas, PSU banking, these are the spaces which are still hurting on a year basis. In the Nifty sectoral momentum overview, you have financial services, IT, private banks, auto, pharma. These are the ones that are on average doing better than other sectors. So look for opportunities within this space if you are doing discretionary kind of investing. And you can see very clearly that energy, public sector enterprise, CPSE, real estate, oil and gas, defense, these have been pushed towards the back end of the sectoral mix, where across different frequencies they have not yet performed. Is the trend improving or declining? So if we see the trend on 50-day moving average, we've gone down a bit in terms of number of stocks. Above 50-day moving average is only 20%, which is very poor. And above 200-day moving average, we have 33%, which is all right, but I mean, it's still quite poor actually. So the market really has to come up and prove its strength. In the uh, percentage of stocks above the various DMAs, above the 200 DMA, you have only 36% small caps, 34% Nifty 50 stocks. Almost a third of the market, uh, pretty evenly, except Nifty Next 50 is above 200 DMA, which is reasonably poor. In the sectoral indices, again, we'll see the 200 DMA stocks. Um, I'll ask my team to make sure that this doesn't happen. Um, IT remains the top sector where most of the um, stocks, 80% of the stocks are above 200 DMA. So IT, pharma, private banks is leading that space. And of course, oil, gas, PSE energy, and PSU banks are completely demolished. Only 8% of the stocks are above 200 DMA. That itself tells you, there's nothing happening there right now. Even very short term moving average, IT, manufacturing, pharma, and consumer durables, these have the top listings in terms of number of stocks above the 200 DMA. Strength in the market, golden cross, what is that? 50-day moving average above 200-day moving average. 37% of CNX 500 stocks are above that, and golden cross is done. Death cross is on 63%. So market is still weak. Overall, two-thirds of the market is in death cross zone, which is not a good sign at all. Can it improve? Of course, it can improve. But right now, if you see the snapshot, that's not a good picture. FIIs continue to sell, but as you can see, last few sessions, selling has come off. In fact, this week there was a buy day post the election, post the budget, and the net sales this week have been a bit less. DIIs, of course, are also continuously buying. There was a cross sell when FIIs were buying that day. There was a cross sell on DIIs. Overall picture, if we see cumulatively, you'll see that FIIs have uh, 88,984 crores is what they have sold, and DIIs have bought 83,968 crores, almost at par. That's all I have for this week's weekly report. I hope you like the content. Do let us know what improvements we can make on this. We certainly want that this report be a comprehensive report on in covering what happened uh, in the markets for this week and what sectors are doing better than others and where are the statistics lying in terms of all the market data. Thank you. Bye.